Disney is in the midst of a civil war.
Activist investor Nelson Peltz vying for more than 2 seats now on Disney's board, setting the stage for a proxy
Bob
fight.
Iger is calling the WGA strike and the imminent SAG-AFTRA strike very disturbing.
The federal judge has dismissed Disney's lawsuit against Governor Ron DeSantis.
Go yourself. Is that clear? Hey, Bob, if you're in the audience.
Along with this multi-front war, Disney's stock has also had a recent surge, and they've made some really exciting strategic moves that may make this fight even more interesting. Let's take a look at the various fronts of this war. First, we have the fight against Elon Musk. This started off as a personal vendetta against CEO Bob Iger, but with Musk's 130 million subscribers on Twitter X and an incessant need to always be making headlines, this beef could quickly start to erode Disney's business. The second fight is against Raider Nelson Peltz and his hedge fund Trian Management. This started a few years ago, but is quickly reaching a boiling point ahead of the April 3rd shareholder meeting, where a shareholder vote will determine the outcome of this proxy battle. The Wall Street Journal is reporting that this proxy battle could end up costing over $70 million, making it the most expensive proxy battle of all time. There are so many other substantially smaller battles that Disney's currently fighting, such as a second proxy battle with a much smaller hedge fund called Blackwell's, along with their fight with the state of Florida, a recently ended strike with the Screen Actors Guild and Writers Guild, and internal board struggles mostly centered around issues of succession. And that's just to name a few. But this video is made for individual investors, and so we'll just focus on the first two battles that I mentioned between Musk and Peltz, because I believe that those could have the most impact on Disney's business. All of this fighting stands against the backdrop of a blowout earnings report from Disney, and perhaps more excitingly, some really interesting strategic decisions Disney's making that could lead to future growth. Be sure to stick around until the end of this video where we'll analyze these recent developments. So buckle up, grab your Mickey ears, and join me as we navigate Disney's battle zones and uncover the truth behind the headlines. Full disclosure, I am a Disney shareholder. I actually made a video describing my initial thoughts right before I made that investment back in November, and since then the stock has risen about 17%, so I'm pretty happy with that. Let's find out if that growth will continue. If you like hearing in-depth stock analysis that focuses on long-term Buffett-style investing, then please like and subscribe to this channel. It would really help us grow and get this out to more people. Okay, starting off, the war between Iger and Musk has, in my opinion, the highest chance of seriously harming the company. It all started back in late November last year when both Iger and Musk were interviewed by Times columnist Andrew Ross Sorkin at their annual DealBook Summit. During the interview, Iger was asked to address his decision to cease advertising on Twitter X over fears of advertisements being placed next to pro-Nazi content.
We just felt that the association with that position and Elon Musk and X was not necessarily a positive one for us, and we decided we would pull our advertising.
Musk subsequently fired back after the interview.
Don't advertise.
You don't want them to advertise?
No.
What do you mean?
If somebody's gonna try to blackmail me with advertising, blackmail me with money, go yourself.
But
Go yourself. Is that clear? I hope it is. Hey, Bob.
Musk's assault on Iger didn't stop there, but since it's difficult to defend a pro-Nazi position, Musk took a different approach. He tried to fire back at Disney, saying that the company's gone corrupt because of their DEI initiatives and make it a culture war issue, going as far as paying the legal fees for an actress who was fired from The Mandalorian. We're not here to get political, but in order to value companies to see if there's an investment opportunity, we need to reduce the noise. We have to flush out the bullshit when we see it. Companies are not moral entities. They are here to sell us more of what they make. Musk is mad at Disney for pulling advertising and hurting his revenue, and he's trying to fire back at Disney. This has nothing to do with free speech or DEI. This is a power play, full stop. Elon wants to position himself as a business kingmaker, and he's trying to take down a high-profile CEO like Bob Iger as an example. And I'm not defending Iger here either. Any step forward in representation is certainly a good thing, and I'm personally for it. But if you look at Section 1 in their annual report, you'll quickly see that their target audience is young people and families. Young people want to see content that is diverse. And we love this, by the way. We want us as consumers and individual investors to understand our collective power and vote with our dollars to make the change that we want to see in the world. But we are fooling ourselves if we think that this makes Disney a moral entity. Disney will do what they think will sell more product. Just look at their content back in the 30s. But Musk is trying to use a culture war issue to try and erode Disney's brand value. We'll see how effective Musk's campaign is. Right now it seems like mostly talk because you still see rising numbers of subscribers to Disney Plus. You see record level of attendance at their theme parks. It doesn't seem like his efforts to undermine Disney's campaign have really had a tangible impact. But we're still in the early innings. If you have a different opinion on this, I'm happy to hear thoughtful rebuttals in the comments. I really am. But for now, let's move on to the proxy battle, which Musk is also subtly taking part in. We covered this proxy battle with Disney in the last video, but I'll give you a quick recap. Billionaire activist investor Nelson Peltz has been buying up a bunch of shares of Disney and is starting a proxy battle in order to get 2 board seats. They outline the changes they want to see in a website that they recently stood up, and we can pull it up right here. And you can see that there's nothing too crazy that they want to change. All right, so we have in this column Disney's current path, and in this column Trian's goals and initial perspectives. Big thing is around succession around Bob Iger. They want to target Netflix-like margins of 15 to 20% by fiscal year 27. Absolutely, and if you actually read the annual report and listen to guidance, that is the way Disney is marching. If you read this list, there's really not much that they say. I mean, there's not too many changes that Disney isn't currently on. The best repellent against corporate activists is a rising stock price. And so with Disney's most recent surge, they have a lot more political capital than they did a few months ago. Trian's claims seem kind of soft at this point, especially when you look at the stock price rising, but at the crux of this proxy fight is a disagreement over Disney's strategy and how to best nudge the company's stock price, which has almost been cut in half, even with the recent surge since its 2021 high. The company is now valued around $200 billion. But since that last video, this battle has only intensified. This past weekend, the Wall Street Journal released a headline article highlighting how this battle could become the most expensive proxy battle of all time, costing Disney $40 million, Trian $25 million, and that third minor hedge fund Blackwell's $6 million. One thing I want to highlight is the reason why this proxy battle has such a high price tag is because there are millions of individual investors who own an outsized portion of Disney's roughly 1.8 billion shares. Individual investors control over 1/3 of Disney stock, which is way higher than typical for a public company. Getting the word out to such a widespread shareholder base is costly. And this is awesome. We love more individual shareholders. We are such an ignored demographic. The more that companies have to listen to us, the better. Our mission at Flank is to tangibly reduce the wealth gap by empowering individual investors. So we love when individual investors are taken into account. This is cause for celebration for us. But not so much for Disney, because it's making it an expensive fight. Disney's firing their countermeasures, going as far as enlisting the help of a cartoon character, Professor Ludwig von Drake, Donald Duck's paternal uncle, in an animated video, how you can vote as a shareholder in a step-by-step manner. Iger's view on the corporate raiders is very clear. He doesn't want to get distracted by activist investors. And that's where we can get to the exciting part of this video. We talked about their recent initiatives and their blowout earnings. So what happened? If we go into Disney's company page, we can go to their income statement and see that revenue rose 7.5% last year, up from 82 billion to 88 billion, a pretty good increase. And we can see that operating income has gone up substantially, 31% over the last year, but still cumulatively it is down from its high in 2019, and that's because streaming is really expensive. If we go into their annual report, then we can actually see their revenue breakdown. We can see some things that might not be viewable at the high level view. So namely, you can see that they owned 67% of Hulu last year, but then they did announce a full takeover of Hulu, which is really exciting. It shows that they're pushing further into streaming, and you can see subscriber growth later on in the annual report. It's hard to read, but basically this sentence is saying that they're making a push into ad-supported streaming. So along with them investing further into streaming with their acquisition of Hulu, they're also gonna open it up to more people by making it more advertising based. This worked really well at Netflix. Some other things for their revenue breakdown: streaming revenue increased 15%, and their operating loss for Disney Plus contracted from $984 million in 2022 to $138 million in 2023, which is an 86% improvement. The street loved that. And Disney Plus subscribers dropped 1% from last quarter, but overall revenue did increase due to price hikes. They've established that their goal is to be profitable by the end of fiscal year 24. So that's a good thing from their earnings. They also reinstituted their dividend and a pretty nice buyback program. If you want my marked up version of the annual report, it's in our Discord, which is linked in the description. All in all, 2023 was a good year for them, but I think what has the street really excited is their most recent announcements. Let's talk about some of their initiatives. Strategy is extremely important when you're studying a company. I actually think it might be just as critical or more critical when it comes to understanding the business. One of the edges we have as individual investors is that we can look long-term at company strategy. And this week at Disney, they made some huge announcements. First is their announcement to go with Fortnite. In a recently announced merger from February 7th, they announced that they will collaborate on all new games and entertainment universe that will further expand the reach of beloved Disney stories and experiences. And just from this title photo, you can see that they're talking about, combining all these different worlds of Disney. It looks like they're going to be trying to make, and I hate this word, a metaverse. But who has better IP to do that? If I were to put a headset on and play some video games, I want to use a lightsaber. I want to swing from buildings like Spider-Man. Those are the things that could create a really cool metaverse. They go on to talk about how it'll all be powered by the Unreal Engine, which is owned by Epic. And CEO of Epic Games said that they're going to build a persistent, open, interoperable ecosystem that will bring together Disney and Fortnite communities. I absolutely love that Disney's trying to push into video games. If you look at just the general market, and this is an article from Forbes, in 2022, video gaming was $184 billion, and you compare that to the global music industry, which is only valued at $26 billion, and the global movie industry that's only $26 billion. So you're looking at, that's roughly $50 billion. Video games are between 5 and 6 times larger than movies and music combined. So that's to mention Disney and Epic's alliance, but what we also may be forgetting is Apple and Disney had a huge alliance. At the end of the keynote, when Apple introduced the Vision Pro, they had this to say.
Apple Vision Pro will change the way we communicate, collaborate, work, and enjoy entertainment. And the Walt Disney Company is the world's leader in entertainment. So I'm thrilled to introduce Bob Iger, CEO of Disney.
Tim Cook called Bob Iger into stage so they could announce where their alliance is going.
We're constantly in search of new ways to entertain, inform, and inspire our fans by combining extraordinary creativity with groundbreaking technology to create truly remarkable experiences.
And this seems like a perfect play. Apple has long said that they want to enter video games. And if we want to look at next generation video gaming, we have to think about it in terms of spatial computing. What companies have better brand value to build a good video game ecosystem than Epic, Disney, and Apple? This could be a huge area for growth. We're still in the early innings, so we have to see where it does play out. But this is making me excited about taking my position in Disney. The only possible sticky thing here is that Apple and Epic have had a long feud over App Store prices and have been in court for a while. So hopefully this settles it. The second big announcement I want to talk about is Disney paying Taylor Swift $75 million to host her Eras Tour on Disney+. This shows that they're continuing to explore the different ways that streaming can go and trying to become a digital competitor to Netflix. If we just look at the value that Taylor has created for the NFL and many other markets, this is a great idea. This is someone you want associated with your branding. This shows that Bob Iger is willing to write the checks to get talent that will move the business forward. And so this is a small indication, but I think it's an important one, and I like to see it as a shareholder. And then the last big announcement that Disney made last week was that Disney-owned ESPN, Fox, and Warner are teaming up to create a streaming platform. And some of the big highlights from this are aligning to create a yet unnamed service that will go direct to consumers who will be able to stream all of these companies' sports content. And from this sports segment, Citi is analyzing that it should cover about 50% of all US sports rights. And so this could be a big deal and unlock future earnings. We've seen that linear television is in decline, and their annual report calls that out multiple times that they see linear television in a decline. What Bob Iger is doing is he's making the initial investments that should pay strong dividends in the future to make sure the company is still able to compound their cash flows. I like all three of these initiatives that I pointed out, and despite all the fronts that Disney is currently fighting, I believe that the ship is being righted and that Disney is on a path. I maintain a very bullish stance on Disney, especially given the current value it's trading at. But there certainly still are risks. We'll see what Musk's continued assault on Disney looks like, and if it can erode some customers, or how that expensive proxy vote is going to shake out. But we can only wait and see. Thank you so much for watching. If you like this video, please remember to like and subscribe, and we'll catch you next time.